What if the next market crash erased 40% of your portfolio overnight? Would your investment survive? Today you'll learn exactly how professional investors prepare for black swan events. You see, when the market completely pulls the rug out from under the global economy, the unprepared just panic. But the prepared, they execute a plan. Welcome to a high-stakes Fox of Wall Street explainer where we're looking at the absolute ultimate test of an investor's mettle. Here is our roadmap for today's breakdown. We're going to define what black swan events actually are, look at the history of market crashes, build out your core defense strategies, talk about managing risk and psychology, and then finish up with a prepared investor checklist. All right, let's dive right into Section 1. What are black swan events? The unpredictable market shocks. By definition, a black swan event is a highly improbable, catastrophic event that cannot be predicted, but it causes massive market disruptions. And hey, the absolute key phrase to remember here is cannot be predicted. Every single day, you've got talking heads on TV trying to guess exactly when the next crash will happen. But true black swans, they blindside everyone. Because they literally defy prediction, professional investors don't even waste their time looking into a crystal ball. Instead, their entire methodology revolves around strategic preparedness. Think of it like this. You can't control the weather, right? But you can definitely build a storm-proof house. Moving on to Section 2, History of Market Crashes. Let's learn from the past. Let's take a quick look back. In 1987, on Black Monday, the Dow dropped 22% in a single day just because of computer glitches. Then we had the dot-com burst, followed by the 2008 financial crisis, which was triggered by a massive systemic housing collapse, and of course, the 2020 COVID-19 crash. The one common thread through all of this, average investors were completely blindsided until it was way too late. So why does preparation actually matter? Well, an unprepared portfolio takes a devastating, massive hit, while a resilient one just experiences a buffer drop. The crucial point here is the actual math of recovery. If your portfolio drops by 50%, you don't just need a 50% gain to get back to even. No, you need a 100% gain just to recover to your original baseline. By buffering that initial drop, say, only falling 20% instead of 50%, you dramatically accelerate your wealth building on the other side of the crash. Surviving that initial shock is hands down the most critical factor for your long-term wealth. Section 3, Core Portfolio Defense Strategies. Let's build your toolkit. Your primary armor here is asset allocation. True protection comes from a smart split across equities, bonds, cash, and alternate defensive sectors. Basically, diversification acts as your shield against concentration risk. If 100% of your money is tied up in one highly volatile tech sector when a black swan hits, you are taking the full brunt of the damage. But by spreading your capital across different asset classes that don't always move in the exact same direction, you're creating an incredible shock absorption system for your wealth. Professional investors use a really specific tactical matrix for this. First, diversification reduces that concentration risk we just talked about. Next, a solid cash reserve provides absolute flexibility. Cash is literally oxygen in a crisis. It prevents you from being forced to sell your stocks at rock-bottom prices just to pay your bills. Then, holding quality stocks with strong balance sheets improves your portfolio's overall resilience. And finally, rebalancing. This means periodically selling what's high and buying what's low to maintain your target allocation. It actually forces you to systematically buy the dip rather than doing it emotionally. Now, if you want to step it up, these advanced tactics create a multi-layered defense. Hedging acts as basic insurance for your portfolio. Utilizing strict position sizing ensures that no single bad investment is ever going to take down your entire ship. And maintaining liquidity? Well, that isn't just about safety. It's all about opportunity. When a black swan causes a massive market sell-off, high-quality assets basically go on a clearance sale. Having liquidity means you've got the dry powder ready to capitalize on those generational buying opportunities. If you're enjoying this breakdown, don't forget to subscribe, like, share this video, and join the Fox of Wall Street community for more investing strategies every week. Okay, Section 4, Managing Risk and Psychology, the Mindset of a Survivor. Listen, you can have the most perfect, mathematically sound portfolio in the world, but if you lack psychological discipline, the whole shebang falls apart. The single most overlooked aspect of financial survival is psychology. The emotional investor watches the news, panics, and ends up selling at the absolute bottom purely out of fear. The prepared investor? They stay completely disciplined, rely on their cash reserves, and methodically rebalance. It is the stark contrast between pure chaos and calm professional execution. So, how do you actually maintain that calm? by anchoring yourself to these core long-term investing principles. Number 1, avoid emotional selling. If the screen is bleeding red, go take a walk. Do not click sell. Number 2, trust in quality businesses. If you own a company that makes products the world fundamentally relies on, they are going to survive the storm. Number 3, stick to your long-term plan. Remember, your timeline here is measured in decades, not days. And number 4, ignore the short-term noise. The media sells panic because it generates clicks. Your job is to tune all of that out and trust the preparation you've put in. Section 5, the Prepared Investor Checklist. Let's get into some actionable steps. All right, here is your concrete 4-step action plan to start fortifying your portfolio today. Step 1, assess your diversification across asset classes. I want you to look at your accounts right now. Are you too heavily weighted in one single area? If so, fix it. Step 2, build and hold a strategic cash reserve. Figure out exactly how many months of living expenses you need to feel totally secure and lock that cash away safely. Step 3, upgrade your holdings to high-quality stocks. Weed out those highly speculative, debt-ridden companies and focus heavily on resilience. And step 4, set a disciplined rebalancing schedule. Whether you do it quarterly or annually, put it on your calendar and stick to it. Remove the emotion entirely from your process.
Remember, the goal isn't predicting black swan events. It's building a portfolio strong enough to survive them. Thanks for watching Fox of Wall Street.
If you found value in this, take a second to engage with the channel. Hit subscribe, smash that like button, and share this with a friend so you can both keep building your financial education together. This video is for educational purposes only and is not financial advice. So I'll leave you with this. Take a really hard look at your accounts today. If the black swan lands tomorrow, will you be a victim of the panic or will you be ready to execute? Stay prepared, stay disciplined, and I'll catch you in the next explainer.